live in two worlds, which is either good news or bad news. I guess in a tough economy, it's good. I can be employed in two different disciplines. But I've been on sort of a professor academic wonk for almost, well, 30 years now. I'm, to my knowledge, the only faculty member in the United States. I have appointments in accounting and real estate of all things, which is kind of strange. My mother's very proud of that. And then, as described, I'm a real world person, as you can appreciate at the professional schools, whether it's medical, law, or business. There are a lot of folks like me running around who are real world people who can kind of bridge the gap between academic theory and practice. With that in mind, this is a very practical talk. In fact, I'm not sure in all the real estate journals I've ever read, I've ever seen a talk that's quite like this. It's sort of, really the way I've pitched it, and I've given this talk to groups over the years, is how to minimize the likelihood that you lose money in this crazy business of real estate investing. And the way you have to sort of think about it, I just want to frame it, is look, I spent a lot of time thinking about risk, right? That's for those of you who maybe did an undergraduate degree in business, an MBA, or maybe took a class or two in finance, and you spent a lot of time thinking about risk. And we distinguish between market risk, right? Sort of the risk of that are macroeconomic that none of us have any control over. And that can include everything from GDP or what Jerome Powell, the most popular person in America right now, other than Taylor Swift. Um, who gives a crap about the Super Bowl? All I care is about the luxury box. But, you know, that we can't, I mean, I don't know what it's going to be. None of us really do. The markets are moving every day and different people trying to interpret it. We then kind of distinguish that between what's sort of like asset level or controllable risk, which is really what this talk is all about. Okay, so what in real estate can we control? How do we minimize the likelihood that we won't have significant losses and certainly catastrophic ones in this crazy business? So I always start, look, I always say humor and comedy is laughter is life's best revenge. So you should have a little bit of that. So don't buy either of these things. A good realtor could say, open air housing or something like that and come up with a good pitch there. And yes, and maybe you've got some children that are, I'm not sure about, some of you maybe in your cars and traffic can't even see my graphics, but are listening. But anyways, I got a couple of cartoons here. Anyhow, but let's get into it and just talk about what leads to most losses in real estate. And oftentimes, other than, of course, market level risks and things that can happen, of course, natural disasters and that sort of thing, it's really fundamental errors. So, as we're going to go through this in gory detail, don't worry, just sort of, relying on the wrong information. Look, and that's one thing we'll talk a lot about. If I had to sort of recast this discussion, I would say it's about due diligence. There's nothing more important than due diligence. And maybe one of the ways I should just frame this for all of us, this is an investing club. And I know a lot of you probably hear from different folks in the equity markets or fixed income or, alternatives or whatnot. But, it's really about, again, what information you get and how not to lose it. Well, I'll leave it at that. I'll get into more detail. And I don't want to preempt all the talk I want to do. It's lack of understanding of the markets. Look, I think intellectual humility is a real thing. As a professor type, obviously, I'm surrounded by a lot of really super, super smart people. And for that, I'm really grateful. There's enough idiocy out there, God knows, on the internet and everywhere else. But really, it's understanding that when you move, if you're talking about buying into a specific asset in a specific geographic location, okay? Now, it's one thing if you're in your backyard. For those of you in Sarasota, I'm in here in West Los Angeles. But look, our firm has gone into markets 5 or 6 different states over time. And I always tell my team, look, there's someone we're competing with in those markets, who knows more than we ever will, that grew up in that market, that knows the players. And so we have to come from that perspective and make sure we understand what's driving this specific market. I mean, like the most common question I get asked is, oh, hey, Eric, or hey, Professor Sussman, what do I think about the real estate market? And I always say, well, what market are you talking about? Are you talking about asset type, housing, multifamily, single family, retail, office, industrial, hotel? Are you talking about Sarasota, Florida? Are you talking Milwaukee? Or are you talking about Beverly Hills? Obviously, fundamental differences in the market, because there's no such thing as the real estate market. Let's be clear. Conflict of interests are everywhere. Now, conflict of interest, of course, are fundamental to the investment business. Duh, that's kind of obvious. In real estate, obviously, there's always conflicts. And so, look, it's not about not investing when there's conflicts of interest. Otherwise, we'd all be in ETFs and and index funds and that sort of thing. But the reality is, there's always conflict. So have your eyes wide open. Your brokers don't always have your best interest in mind, or sometimes there's dual agencies in California. That's very common when you have a broker representing both sides of the transactions. That means you have your eyes very much wide open to be sure. But we'll talk about some policies and procedures. Obviously, you may have seen the news out of New York yesterday. It really has created havoc in the markets a little bit, certainly on yields and on the regional banks. We had that mini banking crisis last spring that seemed to come and go like the wind, when we know there's probably more to come, and there is with the regional banks. And a lot of that is just risk management from a systemic or company level. And for us here, it'd be a portfolio level of risk management, which is super important, of course, which goes to this point, right? You got to manage, certainly if we're talking about specific real estate assets outside of REITs or funds, it's really comes down to property and asset management. I mean, it's blocking and tackling. And I'm sure most of you, or many of you, own some real estate assets, some income properties, and you wouldn't probably argue with me. So much is on the property and asset management level, and getting your hands dirty. We'll talk about that. And of course, the due diligence checklist. I will provide to the investment club, so y'all will have it. I've spent 30 years developing it. It's a due diligence checklist. I hand it out to my students. I'm big on transparency, and I think you'll find that as a very valuable resource. And it's yours for only $19.99. It'll be yours part of this call. Just be nice to me. Anyways, I mentioned risk and thinking about risk. I want to go back to that thought about risk. I kind of got sidetracked there a little bit. Is that risk, as we said, is such an important concept in investing, of course, and that we have to really think about market risk, which we don't control, and these specific risks that we do. And that, again, comes to really due diligence and making sure we manage and assess that properly. And we'll talk about it. Obviously, this is one, my God, that could not be more timely, for better and for worse, and that's about leverage. We're all at some level in the OPM business, the other people, that's not opium, the other people's money business, of course. And leverage is a wonderful thing, and debt is a wonderful thing in the sense that it's cheaper than equity, of course, and the rest of it. But as we're learning in downturns, that can be a very bad thing. And of course, when you've got floating rate debt, and we've had the sort of rate increases that have happened over the last couple of years, it's been very, very difficult. But so you've got to manage that as best you can. Now, I will tell you in the same breath that what's happened with interest rates is probably a 4 or 5 sigma event, as we call it in statistics. That's the wonkish thing. It's just that it's an outlier. It's never happened before. We've never had interest rates rise this fast. Certainly go back to the 70s. They were certainly well above where we are today, but even then they didn't rise as quickly as they did in this most recent years, for sure. So this is one that's super important. Look, we all like to pinch pennies and watch the dollars. And maybe some of you have, when you needed someone to help you out with some contracting, went to your local Home Depot or Lowe's and, had someone get in, your truck or car and had you help you. Look, I mean, I have a philosophy. It's, of course, penny wise and dollar foolish, of course. Rely on licensed bonded folks. I'll give you some thoughts about that. Whether it's contractors in California, obviously we have our state contractors board. You can look to make sure people's licenses are in good standing, make sure they have workers' comp insurance and the rest of it. Again, maybe you'll save some money by using a fly-by-night contractor, but if you have a problem, you're going to pay for it in multiples of that over time. So don't be foolish to me. All right, look. Trust but verify. Let's talk about trusting and verifying. So,
Ronald Reagan.
Okay.
No, I said okay. Ronald Reagan.
Wait, yeah. Actually, it was Bush, but same, different. I think it was Bush Senior. But in any event, look, the one thing that's interesting about real estate, if you stop and think about it, and again, I know I'm dealing with a very fortunate group of individuals on this particular Zoom, but if you think about, let's say you wanted today, this morning, you just had an epiphany and you wanted to buy $1 million worth of Meta, of Facebook. By the way, if you did that, you made a fortune after hours today. But let's say you wanted to do that or whatever. You could do that without reading a single document, without doing jack squat, with a couple clicks of your mouse or you're tapping your iPhone. It's amazing, right? With the internet, on whether you're on E-Trade or Schwab or wherever y'all do your stock investing. What's amazing with real estate, of course, you can't do that. You have to do due diligence. Your lenders require appraisals. You have to do an inspection report and that kind of thing. So in a certain sense, we have to, in real estate, we're talking about individual assets, do some due diligence. Okay, so we're getting a lot of information from sellers, copies of leases and service contracts and copies of invoices and whatever we get in part of the due diligence process. So, again, we generally trust those documents, but you've got to make sure you verify. Because sadly, but we've all probably encountered it, anyone with a little gray hair and a few wrinkles. Thank God for the Zoom filter option. It makes me look younger and better looking than I really am, which I'm sure many of you think that's impossible. But in any event, because if you've been around long enough, you get screwed. People screw you, okay? And so the key is making sure that you verify. How do we do that? So look, in academia and research, we talk about secondary research. We talk about primary research. Secondary research is the internet. You're relying on demographic data from this or that. You're relying on stuff from the Chamber of Commerce. I really don't care. It's something that's secondary. Primary is actually going to the root source. That's talking directly to tenants. That's talking directly to relevant parties, whether they're neighbors or they're other tenants that are adjacent. It could be, of course, talking to other brokers or market participants. It's actually gathering data to verify the representations and the veracity of the data that you're getting. And as I said, there are a lot of folks to talk to. Neighbors. I'm going to ask you all a question. And I bet most of you, if not all of you, own one or two homes or condos. Okay, when you were in escrow and you had your due diligence period of whatever it was, 10 days, 3 weeks, whatever it was, where you had your free look before you could cancel escrow, did any of you actually go knock on neighbors' doors and say, hey, I'm in escrow on the house down the street or next door? Anything I should know? I'll bet nobody. Okay. It's not something you do, but you should. And I think if I tell you, like, yeah, that makes a lot of sense, because who would know about your house, but maybe the neighbors? And by the way, there are stories where people say, oh, yeah, isn't it, honey, isn't it the house where there was that murder a few years ago? And you think we're laughing because it's kind of crazy, right? But that happens. So and there's stories, and one thing I'll add to you, for all of you, and I was, Trish knows this. I'm scheduled to go into court tomorrow to testify as an expert witness in a real estate related case, okay, where someone got screwed, right? And I have done that 100 times, by the way. So some of my discussion with you all is based on seeing a lot of dirty laundry. Okay, so it's important. I mentioned tenants, both the existing tenants and neighboring tenants have information. The tax assessor's office, building and safety, pulling permits, and that kind of thing. There's lots of things you can go to the root source to make sure what you're getting is not just accurate, but that you got the universe of information, right? A broker or even a seller might give you permits. Oh yeah, we added a second story. Here's the permit. But there may be other work. They may not be giving you other permits or other notices of violation or whatever it is. The city has that stuff. It's all available. In some communities, it's online. Sadly, in a lot of places, you got to go, I was in San Diego, California, on a deal I bought a couple of years ago, microfiche. I thought I'd gone to a hot tub time machine, looking at microfiche. And I'm a huge fan of hot tubs and time machines, by the way, for the record. Cross-check data. So I'll give you another practical advantage, right? I'm sure many of you have bought a deal. We're given a rent roll. We're given leases. How many of us went and actually cross-checked everything on the rent roll and the leases to make sure that everything was accurate? The rent they're paying, the move-in date, the lease expiration. All right. So you almost, I tell my students, you almost have to become like an auditor. And I started my career, this is 30 years ago, before 35 years ago, with Price Waterhouse. So that's how I started my career, actually, as an auditor. Wasn't the career I wanted, but I can't tell you how helpful that background was to doing due diligence, because I just am comfortable with doing all this sort of auditing. So make sure you cross-check information.
Hi,
All
Karen.
right.
Nice to meet you.
Hey, guys, hey, there's a lot of background noise, so I don't know if you can mute yourself, whoever, please, that'd be helpful.
Oh, sorry. Yeah, Karen just walked, or
Yeah.
yeah, she just got here, so we're just welcoming her. Sorry, Eric.
So that's my nice way of saying shut the hell up. No, I'm just kidding.
I need that. That's
No,
good.
all good. I know we are doing other things. Estoppel certificates, and again, I don't want to presume anything. I know for some of us are probably more sophisticated and experienced in real estate than others, but it's very common to get what's called an estoppel certificate from commercial tenants. You're buying an office building. No one buys office buildings nowadays, but retail, office, industrial, and even apartments, although that's a little more unusual, is you get a copy of the lease agreement, right? It sounds crazy, but how do you know that lease agreement hasn't been falsified, hasn't been amended or whatever? You get an estoppel certificate, which is a separate form where you give, and I would even be there, you hand the tenant a copy of the lease and they basically say, yep, this is it. This is my lease and everything on it is kosher and cool and consistent with my understanding. There's no other side letters or side agreements. The landlord's in compliance with the lease to the best of my knowledge. We're in compliance with the lease to the best of our knowledge. And at least, again, you've verified representations that are made. Not as important on apartments because of just the risk is concentrated. But when you're in industrial, retail, or office, you have much more tenant risk. Don't ignore estoppel certificates, and lenders often require them. This is a funny one, and that is physically inspect all units. Now, what I mean by that is, let's say you're buying an apartment building, and some of you may have bought large ones. The biggest apartment project our firm has bought is almost 400 units. That would be unusual, but our average apartment a project that Clear Capital buys is about 150 units. Okay, good size, right? I mean, nothing to sneeze at. I require our team, we have to go into every single unit before release contingencies, every single one. Now, what are we looking for? Well, we're looking for, leaks in the ceiling and, whatnot, just to make sure no one's hoarding, no one's got the meth lab in there. And by the way, again, you think I'm joking, but the unit you don't inspect where they come with the key, oh, this doesn't work. I don't know. We'll get into that one later. Yeah, that's the meth lab, by the way. Or Cheech and Chong are and they're rolling some, behemoth burritos. Okay. And so, look, not that I have an issue with that. I mean, I'm from California, for God's sake, so it's legal, a lot of that stuff. But look, you just want to make sure. So some of it's, systems related, deferred maintenance. I also make sure, it's part of my other point, by the tenants. So I go, and now I don't do this so much anymore. I've been promoted to a level of total incompetence. But, I used to go on these tours and I would talk to the tenants. I'd say, hey, even in an apartment, I'd say, hey, how long you lived here? Do you like it? Anything you'd want to tell me? Is management responsive? How's your plumbing? Does it all work? Again, you get some good feedback that way. And, it's important to do that. This is more of a esoteric one. Most of you have good lawyers, I assume, or professionals to help you, but you want to make sure you look at those title reports. If you're getting financing, the lender is probably going to do some of that for you. Again, it's sort of helpful that they do that. But I always want to make sure I get what are called PTRs, preliminary title reports, make sure I'm aware of any liens, encumbrances. Are there, HOA rules or CC&Rs? Certainly, I'm sure many of you have those at your homes and stuff. Just want to make sure I have my eyes wide open. All right. And by the way, I'll have Q&A at the end here for sure. Financial statements. Look, this is where my accounting background, I told you I was an auditor and I'm an accounting prof, so that was kind of nice. You almost, as I said, have to become an auditor because not only are you going to get the rent roll, you're going to get some historical operating statements, maybe calendar year, trailing 12 months, last month. You want to make sure you get, of course, some financial statements. They're not audited, none of them. And the one thing about real estate, when brokers do their offering memoranda, and I'm sure you've all seen those, look at the bottom up page of every page in there. It's in like a 2 font. The information contained herein has not been reviewed for accuracy. I mean, it's basically a big caveat. Do your own due diligence. We're just brokers, and that's our job, is to make you more broke. So just make sure you become kind of a quasi auditor. The rents, you can kind of, again, go back to the rent roll and cross check. Property taxes, check the bills. Now in California, it's based on the sales price, so that's easier to kind of to underwrite. But insurance, of course, we'll talk about that, is changing like crazy. And I don't tell my Floridian friends about that. Same here in California, just bonkers on the insurance side. But again, utilities, want to make sure you look at seasonal, across a whole year. If you're looking at a seasonal, geography, 40 or something like that. Got to become an auditor. So that's what I said. Y'all, you're going to become, honorary CPAs / auditors by tying out things, and make sure you just tie everything out. The last one in the second bullet point is super important, and that is, capital expenditures. I'll talk more about that too, because you'll have some inspections done, of course. I'm going to definitely mention that in a little bit. Service contracts, so that can be everything from utility services to internet, to cable, to trash service and all that. Laundry, maybe if you've got a centralized, don't have laundry in each unit, things like that. You got to review those things. Make sure and look, you want to have a lawyer do it, certainly can do that. It'll cost you perhaps an arm and a leg. The Lord helps those who help themselves. So start doing it yourselves. And if you have questions, of course, engage other professionals. This is going to sound crazy, but this is where, again, my accounting background is helpful. Make sure you're wary of figures that are too round. So you get an operating statement, it'll say insurance, $8,500. Okay. You all tell me, have you ever gotten an insurance bill that was exactly a round number to the pennies? It's always, $13.88 and 77 cents or whatever, right? So you can kind of tell when you see round numbers in an operating statement or a pro forma. It may be an estimate, it may be made up, and there's some interesting research on that, but I'll leave that for another day. So just be, mindful. If you look at figures that look too round, or too consistent. I taught a case last night in my accounting class. Those actually, how timely is this? I actually just thought of it. It was actually on Sunbeam, famous fraud case. Actually, the CEO is a guy named Al Dunlap, who lived in Delray Beach, Florida, as a matter of fact. And if you look at Sunbeam's historical financial statements, they had the same tax rate for both years. And I told my students, in my 30 years of teaching accounting, I've never seen a company have the same exact tax rate 2 years in a row. It just is unheard of. And they were committing fraud. Now, again, A, may have been coincidental to B, but it just was something I couldn't help but think note of. The other thing is issues of omission. And this is one that's really tricky, because all of us can look at an operating statement. All of us can look at a preliminary title report and see what's there and ask questions and hopefully spend the time to do diligence. How do you know if they're missing anything? Those are errors of omission. And that is much harder. That's where it takes experience, right? A good physician who's been around may know there's more data than on the vital statistics, because they've just seen a lot more than some young doctor. No disrespect. I think we'd all like to trade in age for youth, but you kind of get it. So I look at statements all the time, say, hey, where are the management fees? Where's this expense? Where's that expense? Some people self-manage their properties, and then conveniently, of course, or they're not paying themselves a fee. There's no management fees. So make sure you're also mindful if anything is missing. Step back, is anything that you're aware of maybe missing, to be sure. All right. Third parties, we rely on them. And everybody's human, as far as I know. So we, things can make mistakes. So I have a lot here to think about. So just keep that in mind. We trust our advisors, we rely on experts, but they make mistakes. And I always tell the Lord helps, use that phrase all the time. The Lord helps those who help themselves. I really believe it. Take appraisers. That's when I spend a lot of time teaching in class on appraisals, especially in this market right now. Not a lot of comps, not a lot of transaction happening in any space. We've had a huge drop off in transaction volume in this cycle, even if in certain cases prices are fairly firm. Take single family. But that means the comps are probably dated, bad geographies, right? I mean, I remember getting an appraisal back in the financial crisis. This would have been 2009, I think it was, really almost the bottom. And I had to get an appraisal because I actually bought a deal. And the appraiser, it was a joke. I said to him, I said, these are the best comps you got? This comp is 50 miles away. Are you kidding me? He goes, Eric, I ain't got any other comps. There's no deals in this market. I'm like, well, then what good are you doing me? He goes, Eric, I got to give you an appraisal. You're paying me, so make sure you have your cynical goggles on as you're looking at all this sort of stuff. And you can see some of my points here. And there's an old joke in appraisals, even, and some of you may have heard the term, an MAI appraiser, which is the kind of the highest designation for an appraiser. It's the member of the Appraisal Institute, and some of you may have heard the joke that the acronym is made as instructed. So we have to sort of be mindful of that. All right, let's talk about econ. I spend a lot of time talking about economics, and not that I'm selling y'all anything other than knowledge here, but if you're interested, please connect with me on LinkedIn. I publish every quarter a very lengthy, but I hope worthwhile. It's fairly widely read sort of market analysis and commentary and stuff like that. You can find it at Clear Capital, my site too, but it's on LinkedIn as well. No obligation. Anyway, so look, almost the answer to any question. And I get asked so many questions on stuff, on values, on prices, on this and that. It's economics 101. It's supply and demand. Try to think about what are the drivers of demand for units or for rent.
Oh, Eric, you there?
California and Los Angeles, my God. I mean, you've heard of NIMBYism, not in my backyard. We have challenges on supply. And so, of course, that creates a firmness on value and pricing. Again, so on the supply side, most of you kind of have a sense of what's coming out of the ground, if there's raw land, how much permits are being issued, what's happening. And so you kind of got a sense. If you're in an area that's got a lot of density, well, you're not as worried, right? Because trying to rebuild is really challenging. So, but if you're in, let's say, Phoenix, or you're in, some of these markets that have just grown like gangbusters. Texas is classic, right? I used to have a joke that Texas is where equity goes to die. And what does equity die in Texas a lot of times is because there's so much land and getting permits there is so easy. I think if you have a 6-shooter and a twang, you get a permit, and I hope I didn't insult any.
Eric, you there? I think Texas just cut in. Pause, yeah.
It takes years to build crap, and so on the one hand, that's good for owners because it creates constraints on supply, but it also creates some real other issues as well. Demand side is trickier because that is a whole lot of demographic information, macroeconomics, what's happening on everything. And the one thing that I do love about real estate, and you maybe I don't even have to fake it, I really love it, is because I'm an information junkie, and everything affects real estate, everything. And I love being a teacher too, where I can come into class and say, okay, everybody, yesterday I read this in the paper, and it could be some obscure data point. I don't know, X country raised the discount rate, or, gas prices did this, or, whatever. How do you think that affects real estate? And that, the students, they think about it. But everything affects real estate, everything. You tell me a macroeconomic data point on the consumer, on retail sales, on interest rates, on gas prices, on you name it, politics, everything affects real estate. So, just sort of step back, think about all those drivers, and off we go. And that's it. Every data point, every demographics, childbirth rates, marriage rates, population. I mean, all of this is impactful, and we're investing for the future, looking ahead. So we've got to think about those things, not just in the current marketplace, but looking out as we go. Statistics, right? Outliers. Look, I don't know if I can use profanity on this particular call. So, I'm on college campuses, so I have to watch my frickin' pronouns. Blank happens, all right? And we have what are called black swans. Some of you may have heard of a gentleman named Nicholas Taleb, wrote a famous book, Fooled by Randomness. He wrote a couple of other books as well. There are these sort of black swan events. I mentioned, 4 or 5 sigma events that we just don't expect. Okay, now things revert to the mean, generally speaking, right? Something happens that's sort of crazy, and it's sort of an outlier. But we tend to extract and project sort of these things into the future as though things, trees grow to the sky, or, roots go to the center of the earth. And that's just not how things work, generally speaking, in economics, unless you're WeWork and then you're going to the center of the earth. But look, I joke that WeWork is we don't work, and Bed Bath & Beyond is now just Beyond. But look, I mean, so in some cases, things do go under, and we look at. I read 23andMe as looks like it's going down the tubes. But look, generally speaking, things revert to means. Spreadsheets. There's an old joke. You can tell I love jokes. That how do you make any merger and acquisition work? You give an MBA Microsoft Excel, right? I mean, and it's this whole thing. For those of you who are accountant people, you may remember LIFO and FIFO. I talk about GIGO, garbage in and garbage out.
Sorry,
So
Geico.
you've got to really make sure if you're creating spreadsheets, or people that you employ or work with are giving you spreadsheets, that they've really considered the various variables, sensitized the key variables, whether it's rental growth or cap rates on the exit. Look, let me just tell you the three most important variables in any commercial real estate spreadsheet. Number one, without question, is the exit cap rate, which by definition is the one that none of us can predict very well. And yet that's the most, significant one. What will, interest rates and thus cap rates sort of be when you exit? Who knows? Rental growth, all right? Occupancy rates. Those are probably the three biggies. The others are important, but those are the three, biggies. What damaged, and because no matter what space you're in, right? You think about the four classes that are the biggest, right? Multifamily, office, industrial, and retail. Have all been impacted. Obviously, office, I don't need to tell anyone here. I mean, that's just a dumpster fire, and that's probably an insult to both dumpsters and fire. But the multifamily is having some issues because it's really supply. I think underlying fundamentals are still very, very good for multifamily. People can't afford to buy homes. I mean, I know what the median home price down in Sarasota is, but here where I'm at, it's $1 million here near UCLA. It's nuts. Young couples, young people can't buy a home. So that's great. But the increase in rates has caused some pain and suffering, and certainly float on the floating rate side. Industrial is soft. Retail is soft. So I think some investor confidence has been damaged. But I told you, investors are fickle. As soon as things turn around, it'll be
Yeah.
you won't even know. It's like flicking on the switch. Like, gee, what happened? Now everyone's into real estate again.
Yeah.
So the one thing I'll leave you with is just I have as you can probably tell, I'm a walking fortune cookie with statements. I always say that the only constant in life is change. So look, I think that's whatever investor sentiment is now. It'll change in a fickle heartbeat.